Hi friends, today we'll discuss an important current affairs. This was an act recently passed by the Parliament of India. It is Deposit Insurance Credit Guarantee Corporation Amendment Act of 2021. So this Deposit Insurance and Credit Guarantee Corporation Amendment Act is very important because with respect to this, that means not exactly with respect to this, but the reason why we have amended this act, and that the questions were asked in prelims UPSC, and we are all aware like there was two banking failures. One is Punjab and Maharashtra Cooperative Bank, PMC Bank. Second one is Lakshmi Vilas Bank. Recently these banks failed. And when it comes to this Punjab and Maharashtra Cooperative Bank, it is an urban cooperative bank, and as far as the urban cooperative bank regulation is concerned, it is lies with both state and as well as the state regulating board and as well as state registrar and as well as with the Reserve Bank of India. Normally Reserve Bank of India don't looking into the performance of that because state government is there. But unfortunately, neither state government nor Reserve Bank of India has monitored these urban cooperative banks, and because of that some mischief happened and finally it failed. When it failed, what happened is, when any bank failed, what happened is, what about their deposits? Immediately when bank fails, that means when bank went into a bankruptcy, under Banking Regulation Act of 1949, under Banking Regulation Act of 1949, immediately Reserve Bank of India imposes some regulations on the bank. So like what? No one, you should not allowed to be withdrawn beyond this 1000 rupees or 5000 rupees, or you are not supposed to take any deposits from the public. Like that the Banking Regulation Act will put some and according to the Banking Regulation Act, Reserve Bank of India impose some limitations, and because of that the depositors of this PMC has faced lot of problem. They are unable to deposit, they are unable to withdraw their own money even for the emergency purposes. I am giving a recent example, but prior to that, whenever any bank fails, the problem is with the depositors. And whether it is a private bank or whether it is cooperative bank or whether it is a commercial bank, if any bank fails, the problem is the depositors, and they cannot withdraw their own money. Even if you have an urgency. So that is the problem with the existing banking system. And don't we have any safety for those deposits? We have safety wall, but the point is that safety wall whatever we have is not so effective. What is that safety thing we have today? We have already enacted an act in the year 1961 called Deposit Insurance Credit Guarantee Corporation Act. So this Deposit Insurance Credit Guarantee Act was there earlier, and we have enacted it in the year 1961. So what this act will do? This act will create an institute called Deposit Insurance Credit Guarantee Corporation. What this corporation will do is, this corporation will insure the deposits of any bank. That means this is an insurance type of corporation. This insurance corporation provides the insurance to the depositors in a banking system. That means, suppose I deposited money with a particular bank. If that bank fails, then I'll get my money back, because this institute is there. This institute is going to reimburse my money back. But when that institute is there, why it happened in PMC and why it happened in many of the other the banks? What is the problem? Why this institute is unable to settle that disputes or settle that money of depositors? So now I looking into that act and the problems of that act and what are the recent measures that we have brought it. First of all, I'll just give the how you will get the insurance. That process I'll explain. Suppose some people are having some savings with a particular bank. Now the point is, for your savings you will get the insurance facility. But for what type of savings you will get the insurance facility? If you have money in the savings account, if you have money in the current account, if you are having money in the form of fixed deposits, if you have money in terms of recurring deposits, for this you will get the insurance. Suppose if any foreign country, if any foreign country saves money in India, suppose if state government or central government saves money in India, or if money originating from the foreign country that is saved in India, for those things insurance will not be available, but the insurance will only be available to the banks, to the people of India, and that too for the savings, current, fixed and recurring deposits. So this money, that means the money which is not generating in the foreign country, or the point with respect to the governmental savings and foreign government savings, for that you don't get it. Now how much amount of insurance they will get, that's the next important thing. How much amount of insurance they will get it. How much insurance means, suppose I deposited in the bank 15 lakh rupees, will I get 15 lakh insurance? That's the point. And whenever and in the year 1961, when the process has started, when this institute was started, initially the level of insurance we got only for 1500 rupees. That means whatever the money you have in the bank account, but you will be getting maximum of 1500 rupees. Suppose if you have 1400, you will get 1400. If you have 1300, you will get 1300. If you have 500, you will get 500. Likewise, when this corporation started, it was 1500, and when it comes to the 1980, by the time of 1980, it has become 30,000 rupees, and in the year 1993, it has become 1 lakh rupees. In the year 2021, it has become 5 lakh rupees. 5 lakh rupees. So now they are making it as 5 lakh. That means this 5 lakh rupees money either should be in saving, current, fixed and recurring. And in combination with saving plus current plus fixed plus recurring should not exceed 5 lakh. Should not exceed 5 lakh. It is not something like 5 lakh of savings will get a separate insurance, 5 lakh in current account will get a separate insurance, 5 lakh in fixed amount of money will get a separate. No, the total money should not cross 5 lakh. If it crosses 5 lakh, what will happen? You don't get whatever the money that you are getting extra. You don't get that money back. So the insurance is provided only up to 5 lakh rupees of your deposits, that to principal plus interest. Principal plus interest. Suppose if your principal is 4,90,000, if your interest is 10,000, that means the interest on that money is 10,000, then you will get insurance for 5 lakh. Suppose if your principal is 5 lakh and your interest is 10,000, that 10,000 will not be covered under this insurance, because the maximum limit is 5 lakh. This maximum limit is 5 lakh that we have brought last year, because of this PMC bank, which we said like we are increasing this insurance cover up to 5 lakh rupees. If it increases 5 lakh rupees, then whatever the people who are saving beyond the 5 lakh rupees, they are at their own risk. They are at their own risk. Normally the public sector banks and some of the private sector banks which are so strong, normally they don't fail. The failed banks are somewhere smaller banks and the banks on which the regulation is poor. Okay, but anyhow we have learned some lessons from the previous experiences. That is why we are able to increase it to 5 lakh rupees. That 5 lakh includes both principal and interest, and it also includes the savings, current, fixed and recurring. So the total amount should not cross 5 lakh. That means all the amount will be calculated, including both principal and interest. Now one more thing in this insurance, whenever the insurance is provided to the deposits, suppose if you have a bank, that means let us assume bank A. So bank A having so many branches, and with a single owner, if you are a single owner, or you can call it a same owner is having different bank accounts in a different branches of same bank, the same owner having different accounts in a different branches of same bank, then the deposits of all the branches will be considered as only one account, and for that you will get the insurance. For that you will get the insurance. Suppose if I have an account with the same name, that means same owner having different accounts in different banks, then I'll get 5 lakh insurance here, I'll get 5 lakh insurance here, I'll get 5 lakh insurance here. I say up to 5 lakh insurance I'll get. But if it is the same bank with different branches, it will be considered as single account. So this is how you will get the insurance. Now what will happen is, okay, I saved some money in different branches. Now Credit Guarantee Corporation, the deposit insurance and Credit Guarantee Corporation, they are going to provide the insurance to you. But who are going to pay the premium to that? Here, as a depositor, I am not going to pay any deposit. On behalf of me, it is the bank is going to pay the premium to that corporation. Whenever any problem occurs with the bank, I'll tell what is that problem. Whenever any problem occurs with the bank, then immediately that corporation will pay some money to the depositors. And whatever the money that is paid to the depositors has to be paid back again by the bank to the corporation. The bank presently is in a loss. Now they are unable to pay money to the depositors. Already this has paid some premium to the that Credit Guarantee Corporation, Deposit Insurance and Credit Guarantee Corporation, and they are come to your rescue and they will pay some amount of money to the depositors. According to their own the existing insurance norms, they will pay, and they don't directly pay to the people, they will pay only through the bank. Once this payment is done, now the bank has to settle that amount with that insurance company, that means that insurance corporation. Why they have to settle? Because whatever the premium that you are paying, it is a meager premium, you have to settle. Then immediately you may ask, sir, this bank is in a loss, how they will set it? They have to sell all their assets, they have to do anything, but they have to settle it with the corporation. Now what happened is, whenever the bank fails, then immediately this Credit Guarantee Corporation will intervene and they will try to settle. And whenever they are settling, they have to settle only through the bank, and the bank has to settle that amount back after some time. And if it is already is in loss, then how come they will pay that money? They have to sell all their assets and they have to pay. When you have such a stringent system, why they are failing? Why they are failing means, first of all, first point is the insurance amount is low. The insurance amount is low. The first point. Second point is there is no prescribed time period. To settle the amount between this Deposit Insurance Credit Guarantee Corporation and to the depositors of a bank. So because of that reason, now the people has to wait for years and years together to get their deposits back, because this corporation cannot, the moment bank fails, it cannot send the money back to you. Your bank has to send the request and your bank has to send the details, then only they will be in a position to settle that money. So because of these procedural problems in the existing act, they are unable to settle that money. And you know, some of the banks, they are not having this insurance facility also. They are not having this insurance facility also. And if they don't have insurance facility, then it is very difficult. Then it is very difficult. That is the reason why, what we have done is, we have brought an amendment to this Deposit Insurance and Credit Guarantee Corporation Act in the year 2021. Now in this, the corporation is liable to pay, the insured deposit amount in the following cases. I say bank fail, no? What is that meaning of bank fail here? One is liquidation. When a bank went for liquidation, that means now the bank cannot operate, now it want to sell its assets to other people. So when a bank went for liquidation, or when a bank is going for a reconstruction or any other adjustment, that means these banks may not be like a bank now. It may perform other businesses, or the existing business is something they are going to change it because you are failed. Because this reconstruction and the other adjustment will happen only when the bank went into bankruptcy, and at that point of time. Third one, whenever there is a merger or acquisition, whenever there is a merger and acquisition happened, then the responsibility is not with the suppose if another bank is saying like, I don't take that responsibility of the deposit insurance. Suppose if you are making a loss making bank to a profit making bank, then the entire liability and everything has to shift from one bank to the another bank. Then they have to settle it with the insurance corporation. So the point is either in times of liquidation or in times of reconstruction or any other thing, or it is a merger or acquisition. In these times, then this Credit Guarantee Corporation has to pay that money to the depositors. So that is the first one. Second one is interim payment. So that means immediately when this thing happened, so the liability will arise on the date the depositors are restricted from accessing their deposits. So when the liability of this people starts, when the moment Reserve Bank of India imposed any restriction on a bank that you are not supposed to withdraw any amount of money, from that day their liability starts. Once their liability starts, then immediately the Insurance Credit Guarantee Corporation has to pay that money to these depositors. But in some cases, suppose if RBI removes that restriction, because suppose take the case of a bank, immediately this bank went into bankruptcy, there is some problem with this bank, and immediately Reserve Bank of India imposes a condition like, okay, from today onwards you are not supposed to withdraw money more than 1000 rupees. But after 4-5 days some bank has ready to come forward and they have taken this bank, then immediately this burden shift from this bank to the another bank. That means when Reserve Bank of India thinks that this deposit withdrawal, that means the deposit withdrawal they have lifted it, or otherwise if they think that the bank is in a position to pay back their depositors, then the role of Credit Guarantee Corporation don't enter. So at that point of time, this Credit Guarantee Corporation is not entering into this. It is entering only when Reserve Bank of India imposes restriction, and if that restriction continues. But if someone is ready to save this depositor, then the insurer don't come. Next, timeline in the sense, so the day when this liability starts, that means the day when Reserve Bank of India started imposing restriction, then within 90 days, you have to, Credit Guarantee Corporation has to pay the money. That means within first 45 days, the bank has to send the details of all the depositors, and that this Deposit Insurance Credit Guarantee Corporation will looking into the details of that people for next 30 days. Once that process is completed, immediately within next 15 days, now they have to disburse that amount of money to the depositors. Disburse that amount of money to the depositors. This can also be extended for another 90 days, but that too in an extraordinary case if Reserve Bank of India gives approval to that. So this is another thing. That means there is a time limit. There must be an interim payment immediately once the liability starts, and also in these aspects, that means in these cases, now normally we will go for this, the role of Credit Guarantee Corporation enters. Now, premium paid by the banks to the corporation. Premium paid by the banks to the corporation, because I said some of the banks are not paying this thing, but the act says like you must pay, and also timely payment. That means you cannot say like I will pay after some time. No, the timely payment of premium is compulsory. And you may ask a question, sir, if this bank don't take any insurance with this insurance company or the Credit Guarantee Corporation, suppose if they don't take insurance, immediately what they will do is that bank will deregister that particular bank as far as insurance is concerned. If they don't pay, then they will see for whether you have paid it in first 2 to 3 installments. If you continuously don't pay for next 3 installments, they will issue a public notice like in the newspapers, like this bank is not insured bank, and thereafter the existence of the bank will become in question, and Reserve Bank of India removes the registration and all. So that means the bank has to insure itself with the Credit Guarantee Corporation, and this Credit Guarantee Corporation is a subsidiary of Reserve Bank of India. You cannot say like, okay, I will run a bank without having this insurance. No, that's not possible. That if you are not paying your insurance for the continuously 3 installments, then immediately your existence will be in a question, that led to your complete deregistration of the bank. Okay. So that means you have to pay, and there must be a timely payment. And one thing, there are some banks, suppose if it is a commercial banks and all, we can understand, okay, they will be definitely pay, and they are in a because they are completely under the regulatory purview of Reserve Bank of India. But there are some very localized banks, that too these cooperative banks, they don't register themselves with this insurance company. So now the finance ministry has to take a call on that, and they must ensure that there should not be any bank without this insurance. Okay. Now timely payment of this premium, and earlier there was a premium limit of 0.15%, or you can call it as 15 paise, 0.15% of your total deposits, your total outstanding deposits. So on your total outstanding deposits, that means if you have 100 rupees of deposit, you have to pay 15 paise to this Credit Guarantee Corporation. And now this limit is there, no, this limit is removed now. Now this can be increased, but it will be decided by the Reserve Bank of India. It will be decided by the corporation, but in consultation with the Reserve Bank of India. So now under the new amendment, they said like this, whatever the premium limit, earlier they were fixed to 0.15%, now they have removed. So the bill allows the corporation to increase this maximum limit with the prior approval of the Reserve Bank of India. Next, repayment back. Again, it is very important. Now immediately whenever there is a crisis, this corporation came and it's rescued the people. Now the point is, I told like this bank has to repay it again back to that, this bank has to repay that amount of money back to the corporation. and whenever they are repaying it, again there must be a time limit. Within the time limit, you have to, once the corporation makes a payment to the depositor, the insured bank becomes liable to repay the same amount to the corporation, but there is a time limit that is decided by the board of that corporation. You have to pay, and if you are unable to pay, then you have to pay some sort of penalty. That penalty can also be levied on a particular bank, and if the bank is completely failed, if it is not in a position, then you have to go for liquidation, or you have to sell it, and ultimately you have to pay that money to the insurer. Suppose if insurer is not there, normally the bank, if insurer is not there, normally the bank cannot pay the deposits money to the depositors. They cannot. So the point is, this insurer is acting like that. We are prescribing time limits for resolution of everything, either from the payment from corporation to the depositors, or payment back from the bank to the corporation. Now again, this corporation can put some limit on this banking to discharge other specified liabilities until the repayment. That means they can say, like, suppose if this bank is having some other liabilities, now they may put a condition like, first of all you go for liquidation, and in that first pay my amount, later you go for the other things. So such type of conditions also can be placed on a bank. Okay. So these are some of the important aspects of this, the recently brought amendments to the Insurance Deposits Credit Guarantee Corporation Act. And the reason for this is that the failure of the banking system. Now comfortably take insurance, let the insurer pay that money, and after that you can repay it to the insurer, but there is a prescribed time limit. Within 90 days the corporation has to settle, and again the bank has to resettle that with the corporation, but within a specified time, otherwise you will be liable for the paying of penalty. Earlier the average settlement of time was around more than 500 days, and in some cases the depositors has to wait for up to some years also. Sometimes it took up to 7 to 8 years also. So if at all we want to improve the confidence on the banking system, this insurance system must works well, because the people only think like, whenever I deposited money, that money should be safe, whatever happened to the bank. So because the government alone now cannot start the banks, because government is now almost 70% of the stake is by the government, but nowadays private sector banks and a lot of other people are also want to start the banking system, and the banking system will be success only when people are having the trust on the banking system, and the trust will become only through these type of measures, because banking system is very, very important. Banking and financial systems are lifeline for the economy, and if at all we want to promote more and more banks, this insurance facility is must and should, and it is compulsory. Now we have made it compulsory. And if any one or two things which are out of purview of the regulation system, again they will be brought back. Now I will give you what are the banks that are benefiting under this, or what are the banks that must be covered under this insurances. All the commercial banks, that includes public sector banks, private banks, local area banks, foreign banks, regional rural banks, small banks, payment banks. So these are all included under this. So commercial banks like regional rural banks, private banks, public sector banks, foreign banks, and even the payment banks, small banks, local area banks. Apart from this, cooperative banks, which includes both urban cooperative banks and primary urban cooperative banks and rural cooperative banks. In rural cooperative banks, whether it is a central bank, whether it is a state level bank, whether it is a primary bank at the village level. So all the cooperative banks, all the commercial banks will now covered under this particular insurance. Now I will give one more figure so that you can understand, because you have a doubt like, sir, this 5 lakh rupees, is it sufficient or not? This 5 lakh rupees, is it really sufficient or not? That's what the normally will get the question. See, this 5 lakh rupees is sufficient. Why? Because government of India, or because the corporation is under the Reserve Bank of India, so a government entities cannot give the guarantee to the thousands and thousands crores of deposits, because whenever they are depositing, normally our banking system is so safe, and whenever they are depositing that much amount of money, means they are ready to take the risk. Now with this increase of insurance amount from 1 lakh to the 5 lakh, 1 lakh to the 5 lakh, now I can give some number how many people are covered. See, I am writing account wise and I am writing this amount wise. With this new change of account, with this new change of this 5 lakh rupees, we are having total 252.6 crores of accounts are there. 252.6 crore accounts are there, and out of this 252.6 crore account, 247.8 crore accounts are covered because of this 5 lakh insurance. That means of the total 252.6 crore account, 247.8 crore accounts are having a deposits less than 5 lakh rupees. That include that shows like almost 98% of the accounts are now covered under this deposit insurance. 98% of the accounts are now completely saved under the deposit insurance. So there is no problem even if the banking system fails, because they can get their money back. And the global average is only 80%. That means if you are able to provide 80% to the 80% of depositors insurance, normally we will consider it's a good thing, but we are making it 98. Second one, as far as the amount is concerned, the total amount of money is 149.7 lakh crore. This is the total deposits that are there in the bank. But now because of this 5 lakh increase, almost 76.7 lakh crore comes under the deposit net. That means whatever the 2% of the people are holding, remaining 76% of the money. The remaining 2% of the people are holding the remaining almost the 74 lakh crores of money. Anyhow, they are rich people, they take risk. But anyhow, the 76.7 lakh crore is almost 98% of the depositors' money. That means 50.9% of the total money. 50.9% of the total money is covered under the insurance deposit. The global norm is that 20 to 30% of the money inside the bank, if you deposit, it's okay. But our is 50.9%. That means both in terms of deposit number and both in terms of money, we are above the global average level. So that means increasing up to 5 lakh will cover these many people. That means most of the poor people will be covered under this, So then there is no problem. So because of this increase in deposit amount up to 5 lakh rupees, I'll show another thing, like how much amount of deposits are covered. And you have seen almost 98% of the depositors and 50% of the deposits in India are insured. Now if I divided that entire deposits in the regional rural banks, almost 84% of the deposits are covered under this insurance. Second one, if you looking into the cooperative banks, almost 70% of the deposits are covered under this insurance. And if I take the State Bank of India, 59% of the deposits of the State Bank of India are covered under this insurance. And if I take the total public sector banks, 51% of the deposits are covered under this benefit. And if I take private banks, 40% of the deposits are covered under this insurance. And if I take foreign banks, because foreign banks are also running their branches in India, and if I take the foreign banks, 9% of the deposits are covered under this insurance. That means the total overall almost 50.1% of the deposits are covered, and if you divide it mostly RRBs and cooperative banks, they are covering almost more than 70% in cooperatives and 84% in RRBs. They are covered under this. They are covered under this. So this is the level of coverage that we are increased with this increase of insurance limit up to 5 lakh, and that we have done last year. But in order to improve the performance of this Credit Guarantee Corporation, we put some sort of time limits for the settlement, and we make it mandatory that within a time period the banks has to pay the premium amount of money. And if the banks, they don't resettle or settle back with the Credit Guarantee Corporation, they have to pay liability. And within the 90 days period they have to pay it. The corporation has to pay to the depositors. The corporation don't deal directly with the depositors, but they will deposit with only in consonance with the bank, the respective bank, because the entire information with the bank. So this is very, very important, because recently brought amendment, and also economic survey has also dealt about this entire insurance aspect. So this is something about this Deposit Insurance and Credit Guarantee Amendment Act of 2021. What are the recent changes that we have brought here? Okay, so thank you.
Amrita IAS Academy.